We have another jam-packed panel with a whole bunch of rock stars that are joining us today. And the panel discussion focuses around investment and deal flow, titled Deepening Access to Financial Services for African SMMEs. So I'll give it directly over to the panel moderator. The show is all yours, Nicole.
Thank you so much, Mix, and greetings everyone, wherever you are in the world. My name is Nicole Anderson. I am based in the UK. I run an impact investment house called Recent Ventures, and I also have the honor of being a founding board member of the Mauritian African FinTech Association. So we've got, as Mick said, we have got a pretty important topic to discuss today, and I'm very glad to have the people that I have on the panel. Before we kick off with a brief introduction to who's joining you today, I'd like to set a little bit of context. What a year, what a 14 months we've had. 2020 to 2021 has seen but depending on where you look, a 3 to 5% contraction in economic growth for the sub-Saharan continent. Amongst so many of the adverse effects in the global economy, the crisis continues to pose an even deeper threat to financial inclusion for the continent. Lockdowns and curfews have physically disabled businesses, mobile money agents, and bank branches themselves in terms of being able to take on clients and go about their business as normal. Liquidity support is always an issue for small businesses, and that has only gone to an extended area of concern. However, the picture is challenging, but there is hope, and there is a lot being done on the ground. I'm extremely excited to be joined by my 4 panelists who are actually going to expose some of the roles, activities, and commitments they are making to the subcontinent to unlock the necessary funding for businesses. So without further ado, I'm joined by Shweta Beeharee, and Shweta is Portfolio Manager at Capital Asset Management based in Mauritius. Sanjay Mungur, who is founder and CEO of FinClub, also Mauritius-based. Aysha Tegally is CEO and founder of Future Females Invest. And Jonathan Pinifolo, I have to say, Jonathan, I absolutely love your surname, is project manager and digital financial inclusion expert at the Comesa Business Council. So I would like to turn to you, Shweta, for my first question. In your role, I mean, you've seen the ups and downs of businesses, certainly over many years. I know you're based in Mauritius, and you'll place a particular lens on the Mauritius climate, but I'd like to understand from you as a symbol for the continent itself, what have been the last 5 years like for SME financing from your perspective? So what have been the ups and the downs? And has the last year deviated from that at all? And what particularly are the common pitfalls for SMEs when raising equity, and how could that be avoided? So a lot in that question, but over to you.
Thank you, Nicole, and good afternoon, everyone. It is such a big pleasure to be amongst you today, and I thank the organizers for this opportunity. Well, I'm the portfolio manager at Capital Asset, which is the CIS manager of the SME Equity Fund. And SME Equity Fund provides funding in terms of equity, quasi-equity, debentures to companies which are set up in Mauritius. And we can invest from 500,000 rupees to 25 million rupees in your company, including in startups. The main condition is that at least 51% of the capital should come from the promoters. And 55% of our seed capital comes from the Mauritian government and 45% from our local commercial banks. And our board is comprised of 3 persons from banks and other 3 from government institutions. And as of date, the fund has financed around 165 companies for an amount of more than 500 million rupees. So the trends that we have seen is that SMEs in Mauritius have been more keen in the last 5 years. They have been more keen to move away from traditional finance, namely banks, and they are more accepting of alternative sources of finance. The demand for funds have been more for expansion and modernization purposes. And what we see actually, the main deviation from last year is that now there is a surge in companies looking for working capital to sustain operations. Some companies have come up, I must say, with great diversification strategies, be it in terms of product, be it in terms of market. And we have seen that inventiveness which has come up. And this is really interesting. And what we see also is that there is an urgent need to revamp certain products to cater for the growing population who have faced and who are facing a reduction in their purchasing power. And the trend is we see more people buying out of necessity, and they are making more conscious decisions when purchasing. So this is the trend that has been surfacing lately. So, and the common pitfalls that we see when SMEs are raising equity is SMEs tend to forget that as soon as someone gives you money, they will want to have a say in your business, okay? And the question is whether the entrepreneur has got the maturity, has got the time, has got the patience to deal with all this. And this is something that they should not forget at all, because the idea also is not to dilute the shareholding of the founders so much that they no longer have any motivation to work for the company. And entrepreneurs, SMEs should not forget that their biggest ally, which they can bring to any discussion table, is the strength of their business model and the ability to generate cash. Entrepreneurs should never forget that being successful at raising equity does not equate to a creation of value in the business. A business becomes valuable due to the strength of its business model and its capacity to generate sales. And in the same line of thinking, I must say that successful entrepreneurs will be those who have been consistent, who have had the discipline and the grit to keep going, despite and especially when the going gets tough, and never to lose focus on the vision of the future, while keeping the optimism of a startup mentality. And the first and foremost thing when challenges come up is to immediately get out of any victim mode. All gossips, all complaints, stop. Instead, focus 100% of your energy in the resources that you have now and assess what can be done immediately and urgently. Thank you.
I love it. I love the passion. What a way to kick off the panel. I wasn't expecting that, Shweta. I mean, that's like a business coaching session thrown into the first question as well. But no, I love it. I think, people draw a lot of strength from that. I mean, after all, entrepreneurs are by virtue enterprising individuals, resilient individuals, and how they, never reverse to risk. So I think that couldn't be more important at the time right now. So you said a lot of things there, but I think, given the fact that you've culminated, so to speak, on the challenges facing entrepreneurs and SMEs when they raise equity, of course, more mature businesses have potentially an opportunity to diversify what kind of source of funding they look for. So Sanjay, you with FinClub represent the first peer-to-peer fintech startup to secure a license in Mauritius, which is fantastic. So you yourself as an entrepreneur have pushed through the barriers to get where you are. So congratulations. And the lending market is so up and down at the moment. We know globally that there's been a massive contraction in lending to businesses. The smaller, unfortunately, the worse you are. And this is a pretty consistent picture wherever you are in the world. So non-bank lending is becoming, I think, it was always important as a topic and as a means and a mechanism to activate funding into a market. But I think it's really even more important now. So I would love the audience to learn a little bit about, first of all, your offering, why you see FinClub being so relevant here and now. And how are you, delivering value to both lender and borrower through the platform? Because some people may be familiar with peer-to-peer in general, but maybe not so familiar with what you're bringing to market. And I'm going to give you a slight hint because I kind of know where there's a USP for FinClub, and that is the particular approach you've taken with technology. So if you could throw in that without giving too much away and why that's relevant specifically for Africa, I certainly would be excited to hear that.
Thank you, Nicole. Good afternoon, everyone. Well, you did mention 3 key words: small, quick, and value. Basically, we started with a very simple question. What if a person has an emergency need, let's say of 20,000 rupees, which is about $250 in the next 2 or 3 days? In Mauritius, if you need, firstly, the major issue is that banks do not lend 50,000 rupees. That's the minimum, actually. Some banks would go to up to 100,000 rupees. Interest rates typically ranges between 12% for unsecured short-term loan, 15% for hire purchases, and even higher going into credit cards and others. And then traditional KYC verification is typically lengthy and require physical presence, and mostly with original documentations. These are just a few of the hurdles that we face. And as Mauritian, this is what we are tackling. Half of the Mauritian population, working population, I should add, earns less than 32,000 rupees, which is about $750. And significant proportions are self-employed, work in informal sectors, or in MSMEs. In fact, MSMEs represent about 55% of the Mauritian workforce and contribute to something like 40% of the GDP. We found this a massive opportunity. This gap as a massive opportunity targeting those who are becoming really credit invisible. As we are in this small loan segment, big volume, it was therefore very critical that we try to automate as many processes as possible. We are therefore leveraging on big data analytics. It's critical that big data analytics to develop machine learning, ML-driven machine learning tools. For example, I take a couple of examples. We are developing a digital identity module, basically to ascertain who are you, to ascertain that you are who you actually say you are. That is basically looking at fraud detection and prevention. And secondly, machine ML-driven score engine, where we are using financial data, which normally demonstrate the capacity, the financial capacity to pay back a loan, and also non-financial data, which basically determine the willingness to pay a loan. We are therefore using alternative data from various sources and through various means. Therefore, access to data, as you were talking about hurdles, was one of the key hurdles that we faced and we are still facing. All these are great, but we are modeling ourselves to be able to scale to the African market. And in that context, this becomes actually more critical because 57% of Africans don't have bank accounts. Okay, nearly one in two people in sub-Saharan Africa lack a proper ID. On the other hand, the good thing is that something like 500 million people in Africa have got mobile phone, and 44% of them are smartphone because smartphones are becoming cheaper, more accessible. Okay, and 40% of African banking customers prefer digital channel for transactions. Okay, so over the past, and we have seen that over the past few years, peer-to-peer lending in Africa has been growing by something like 300% per year, year on year off, and driven mostly in countries like, for example, South Africa, Nigeria, and Kenya. But the key observation also was that 90% of that funding was coming from outside Africa, which does really show the opportunity, the potential here. Because it is estimated by 2025, the peer-to-peer lending market could be worth around $2.5 billion. So we are therefore leveraging on all these tools, on all these technologies, to be able to first develop in Mauritius, and then eventually to scale out, because that's already in our business plan, to scale out to 4 other East African countries within the next 3 years. Thank you.
Fabulous, fabulous. I think that's super important for the audience to understand. And you've said so much there. I think the whole topic for many years, if not a full decade of fintech, has been, I guess, the final frontier is creditworthiness. And it's been woefully disappointing, actually, how fintech, even though it's made some inroads to actually helping look at the future prediction of risk, certainly at a consumer and a small business level, the adoption of that and the acceptance of that is still not quite there. So I think hats off to you, Sanjay, excellent to know. And again, given what you've just said, I think, Jonathan, you can build certainly on that perfectly, given, I guess, COMESA's mission to serve African economic development and financial inclusion. I would imagine, given your title, that's what your day job is. So I'd love for you to unpack what that means. What effectively are the programs and tactics and activities that you and COMESA are taking, especially in the times we face, and the prelude that I made to this panel. I think if there was ever an important time for you to do what you do and the good you do, it's now. I'd also like to know from your perspective, how you see technology innovation, specifically in fintech, driving what it's done for Africa, but what do you see as the next frontier for financial inclusion, and where does fintech play a role in that?
And thank you, Nicole. First and foremost, I think also just maybe to give a brief overview of COMESA Business Council. So we are basically a recognized business member organization, and we are established as a private sector institution of COMESA. So in essence, we represent the interests of the business sector at regional level, but also when it comes to services, our services go beyond advocacy. So we are mainly focusing on 3 key pillars. Number 1 is to promote business participation in regional integration, i.e. issues to do with business linkages. But also number 2, the second pillar is on investment, and the final pillar is also on participation in regional as well as continental and global trade. So how are we doing this? Our strategy, basically, we are focusing on the growth of strong business synergies. Like, for instance, I mentioned about the business-to-business linkages, but also we are focusing on issues like development of business opportunities, but also business alliances. We are also looking at issues like, for instance, legislative and strategic for advocacy. So on that point, we are basically providing custom tailor-made services that are driven by both the industry as well as the micro, small, and medium enterprises. So in terms of what we're doing as COMESA Business Council, we have one of the flagship projects, and this is the one on the digital integrated common payment system. And this is for micro, small, and medium enterprises. So we are basically supporting the design as well as the development of the regional payment system that is low cost, because obviously when it comes to micro, small, and medium enterprises, one of the other issues that comes into play is cost, which is a prohibiting factor. So it has to be low cost, but also interoperable. If I'm able to send money from Mauritius, maybe using a mobile phone, I should be able to get it on a bank, probably in Egypt or in Nigeria. And in terms of our approach, we are looking at having a business model first, and after that, we shall go into the implementation aspect. But of course, the main founding aspect shall be the regulatory framework. So if you are to look at how the African consumer power has risen, you will notice, you will realize to say that when it comes to most consumers, the demand for digital financial services has actually increased, has gone high. And why? This is because of the efficiency that it brings itself. So just to give an example, for instance, if I'm to pay maybe electricity bill, if I'm using cash, I have to travel using my car, or I pay public transport, which is time wasted, but also even the time that I've used maybe to pay for my fuel or even for the public transport. However, if I'm doing that transaction digitally, I will do it at home without even wasting my time to travel, but also even having
I think he may have faded in and out. Yeah. Okay. We can come back to Jonathan. I think he was almost done. I mean, look, I think everyone's made such incredibly valid comments, and I'm also fantastically excited by having Aysha on the panel, because the one thing that we all know is everywhere in the world, the rise of diversity as a topic is not just rhetoric. And diversity comes in many forms, but certainly Africa and, female ingenuity is something that go hand in hand. Aysha, I know that is absolutely front and center of what you spend your time doing and advocating for. So supporting female entrepreneurs in Africa is what you're super passionate about and have committed to. And, you said something in the briefing to me, which I kind of probably knew, but I hadn't really appreciated, is how underserved female entrepreneurs are in terms of access to funding or allocation of funding in its many spectrums in Africa. So the ratio is incredibly low. So I think the audience, myself, certainly, I can count myself in. I really am very pro what 50% of the population's ingenuity can deliver for the continent, and I'd love to get your take on what are the demands and the unique challenges that currently face African female entrepreneurs, and what can be done about it. What are you doing about it?
Thank you so much, Nicole, for that lovely introduction. I just actually want to pick up on your 50% of the world. Women are 50% of the world. Now, if you were running a business, would you ignore 50% of your customers? Well, that is what's happening in the financing world. In 2020, companies with a female CEO in Africa, only 8% of deals went to women, companies with a female CEO, and that was 2% of total funding. So 50% of the population are being ignored or sidelined. And why is this happening? And this is happening because women aren't holding positions where they're the ones allocating capital. Sadly, still in the 2020s, 2021, there aren't enough women on investment committees. There aren't enough women running venture capital firms and private equity firms. Fortunately, in our network, we have a network of amazing women who are running these firms, but there's not enough of them. And there's been so much research that shows that you invest in people that look and sound like you. So if a woman is pitching to a panel of all men, it's not very likely that they're going to invest in her. It's not very likely that they're going to understand some of the opportunities that women are, that the things that women like to buy, the things that are interesting to women. So, you know, diversity is important, having more women on boards, as I said, having more women on investment committees. Women also interestingly make 70 to 80% of purchasing decisions. So by not investing in women, we're actually missing out on a huge opportunity for growth and innovation and services and products that will be used and will be purchased by a huge proportion of society. So we need to see, as I said, more women allocating capital. We at Future Females Invest believe that women need to be seen, heard, and most importantly, funded. There are lots of fantastic training programs and mentoring programs for women, but what we have seen through our years of working with women entrepreneurs is that by giving women money, by giving people money, that's what makes the biggest difference in a business. It gives you the opportunity to take that space and think about what your business needs, to be able to hire people, to be able to buy more stock, to be able to network and do business development, to go out and fundraise more. So this is, you know, one of the reasons why we've also set up the Future Females Invest Angel Network, and it's a network of women who invest in women, invest in female-founded businesses across the continent. There was some research that was done, and less than 5% of angels in Africa are women. So again, the early stage seed capital is not reaching women who are potentially the biggest force for innovation on the continent. So we at Future Females Invest have created a network of women that are investing various size tickets in different female-founded companies. And we are looking forward to engaging with more and more women to become, to allocate some of their capital to enable women to grow, develop, scale their businesses. Shweta said something very interesting. You know, when someone gives you money, they want to say in your company. Yes, we at the Future Females Invest Angel Network, we do want to say in your company and your business, but not in that way. We are here to support you as a female founder, to help you on a journey that we know is more difficult for women, right? We know that COVID has disproportionately impacted women, as we see more women having to stay at home and look after children, as well as juggle businesses and all the rest of it. So, you know, so we're creating that village, we're creating a support system for women that includes, you know, mentoring, networking, access to networks and marketing, but most importantly, access to capital.
Fantastic to hear. Look, I think we've gone through the generation of, you know, the division. It's not about male and female. And I think, there is this kind of, I guess, virtuous cycle. I think what I'd like to say is well done, but also this is about the good of the whole, right? And women need their male counterparts to support them, their male counterparts to success, to be, you know, push their success, to promote their success. It can't be done alone. So anyway, we could go on all day about that. But I think if you don't mind, Jonathan, you dipped out and you've come back. So well done, you. I want to do two things with you, if you don't mind. Give you a chance to finish off that question I put to you, and actually add to a question. We've had a question from the audience, which is a question from a chap called James Njugana. Sorry, James, I'm probably messing that totally up. But anyway, he said he's very keen to hear more about the digital integrated common payment system. Is it at the pilot phase? And if so, what has been done to involve national governments or member states? Have some been more supportive or proactive than others? And how does CAMESA address the various policy, infrastructure, and partnership challenges? So that's a nice, juicy question for you. Over to you, Jonathan.
Okay, thank you, Nicole, and my apologies. I was locked out because of the network challenges. So just to capture the last question, in terms of the fintech driving the next frontier for digital financial inclusion, you realize to note that these fintechs will streamline cash-based MSMEs. As of now, if you look at the sub-Saharan region, most of the MSMEs are using cash transactions. So with the fintechs, we're looking at streamlining these cash-based MSMEs into digital markets. And by the end of the day, they have to enjoy affordable transactions, interoperable. They should be able to send money easily, but also even real-time transactions. If it's buying a merchandise, the transaction has to happen there and then instantly. And by the end of the day, the expected impact is increased volumes of cross-border transactions within the region as COMESA, but also we are looking even at Africa as a whole. And other benefits include like financial inclusion, number 2. Number 3, we're also talking about the visibility of African products within the regional markets, and also even the participation of the MSMEs themselves in regional as well as continental and global trade. So by the end of the day, this will also directly respond to the deficit of intra-trade within Africa as a continent. So coming to the question that has been posed from the audience, in terms of our project, we first started with a business case whereby we're trying to establish if indeed there's a business case, because our focus is on these low value payments, the little payments, not the back payments. So this is also one of the critical areas to look at. And you and me agree to say that maybe about over 70% of the economy in Africa is driven by these MSMEs. Hence, they need to focus on them. So we did a business case report and it was validated by 9 countries. We had picked about 9 countries, and these are Malawi, Zambia, Tanzania, Ethiopia, Mauritius, Egypt, Kenya, Uganda, and Rwanda. So the validation of the business case was done. And we also did the model policy framework, whereby we had a high-level public-private dialogue, which was held in Rwanda in a hybrid format. And we'll also be finalizing the same on next month. And now we're in the process now of doing the business modeling. So in terms of consultations, as the question says, we've managed to engage like governments, central banks. We've engaged network operators, commercial banks, MNOs, but also even the MSMEs themselves who are the beneficiaries. And we have also engaged other groups like, for instance, the fintechs and others. So in brief, that's where we are in as far as our project is concerned. Thank you.
Super, Jonathan. Right, just checking on whether we've got any additional questions from the audience. If not, we've got plenty to go on with. So, yeah, nothing in so far. So what I'd like to do very quickly is we've got time for 2 other questions. And please, perhaps we can combine them, I think, just to be efficient on time. So first of all, I'd like to go around everyone and get your bird's eye view of how Africa is really set to shape up and service startups and SMEs. We've heard some of the successes. Can we build on some of those successes? What do you see as, some of you have talked about the gaps. Absolutely. Can we reinforce those so the audience understands and the lessons learned? So again, how is Africa shaping up? What does it still need to do? What are the successes it can build on? And then finally, each of you, please, I'd like to hear your own personal driver in what you are doing in your roles to deepen access to finance for, the continent's growing entrepreneurs and SMEs. We've gone through a huge amount of economic trauma around the world. Let this be an opportunity for Africa to shine. So inspirationally, let's just keep on that theme, upbeat theme. Shweta, I think I'm going to turn over to you. Here's the baton. Could you respond with those 2 questions?
Yes, again, I will go back. It is about the fundamentals. When we talk of businesses, we talk about people behind the businesses. And the people behind the business is the entrepreneur. It is not only entrepreneur, but the accompanying stuff which goes along. And there is a mindset overhaul that we have to go through. It's not only in Mauritius, but not only in Africa, but overall. We have a mindset which has to change towards more of consciousness, and more of awakening is required. We are performing in a mindset of limitation, in a mindset of I cannot do this because I do not have that, and this should go. And we should look at things in how we can manage, and what is it that we want to create with what we have right now. The future is not about what is going to happen, but it is about the seeds that we are going to put in the soil right now. Is the soil ready? This is what we have to see also. Is the seed of the right quality? Do we have the right conditions to have it? And what is the vision? Have we been able to see, okay, we want something in the future, yes, but are we able to visualize it now? Now you should see the end product, and only then you will be able to work towards what you want.
Excellent. Thank you, Shweta. Alrighty. Sanjay, again, your perspective as you plan for your business, I think it's a perfect segue. You have, an opportunity with your own business to grow with, I guess, the trend. You couldn't have picked a perfect time or a more tenuous time, but I know you're entrepreneurial, so you'll see it as an opportunity. Over to you on those two questions.
Definitely. Let me take this exercise first. Obviously, we're starting to have a lot of country levels success, in Nigeria, in Kenya, and so on. But if you look at the continental level, today, mobile technology and mobile-driven services account for around 9% of GDP of sub-Saharan Africa. 9%. And that contributes to around $155 billion in economic value. Okay. And the mobile ecosystem is employing something like 3.8 million people. So that's already, it shows the success it can bring. Now, what should be done, and what are we doing? Obviously, we require regulation, better regulation. You did mention initially, we struggle initially, pushing barriers, getting the regulations conducive for fintech in general, and for us in particular. It took us almost like 2.5 years to get a license from the FSC, which is the non-banking regulator in Mauritius. So one is regulation. Second, the developing of an entrepreneurial culture. And what Jonathan was mentioning in terms of, for example, trying to shift people from cash to digital payment and so on, and also connecting the countries. That's really, I think it's going to be a game changer, because with the continental agreement coming up, that actually already came up, I think, the latter part of last year, there will definitely be more cross-border businesses and cross-border trading, together with investment from one African country to other African country. Obviously, for that entrepreneurial culture to be able to develop, we need a good network of accelerators, incubators, but also of alternative. I mean, Shweta mentioned about SME equity. That's excellent. That's one option. We should be looking at other potential options. Angel investment, obviously, that's a very important one, because at seed level, very few banks and very few VCs and even fewer banks want to put money at that level. Training, capacity building, again, that's critical. And for example, if we take the case of Mauritius, it is now announced that if somebody studies in Mauritius, you automatically can get 2-year and 10 years extension and work permit to be able to keep on living in Mauritius and working in Mauritius. So that's capacity, and it's great. On a more personal level, as we said, we would like really to be able to have to onboard clients fast, very quickly, make it as easy as possible, for example, using OCR and other forms of technologies, in order to make alternative finances alternative and inclusive finances more affordable, quicker, and then eventually scale out, as I mentioned earlier on, to 3 other African countries.
Sanjay, do you mind if I'm so sorry, we're going to run out of time, but
okay, thank you.
Little insights. Okay, I'm going to give 30 seconds each. Sorry, ladies and gents. Aysha, thoughts, 30 seconds worth, and then over to you, Jonathan, as a closing comment.
Okay, the pressure's on, but as I've said before, I want to see more money in the hands of women. So we want to see women being funded at the same level. So an increase. So we want that 8%, that 2% to increase into double digits. And we want to see more women allocating money. So we want to see more women as angel investors. We want to see more women on investment committees and running funds.
Fantastic. Jonathan,
Thank you.
All on you now.
Thank you. So for me, I agree 100% with Sanjay to say mobile money platforms is a big success. But on what we need to do, just to add more, I think number one, we have to ensure that there's interoperability of these systems within the region. But also, again, we have to look at issues like consumer protection of digital financial services, because we are transmitting customer data, customer money. It has to be secured. We have to focus on issues like cybersecurity. But again, my last point is on passing the cost to the MSMEs. We have to make sure that probably we are also focusing on infrastructure sharing so that the cost of doing business is minimized. Thank you very much.
Awesome. Look, guys, I think the audience can't complain. We've packed this 35 to 45 minutes full of insights. I think the last thing is, this association is driven to achieve, enable much of what we've said. We want Africa to be open for business. We want Africa to show the world and kick ass. Sorry, I didn't say that, but and that means we must be open to competition. That's a very healthy landscape. And I think everything you've said is supporting that. So I just want to thank the organizers, thank the Mauritian African FinTech Association, and most importantly, thank the audience. Enjoy.
Thank you.
Thank you.
Thank you.